market fell below the 6,000 level again last week. What dragged the market lower? Which sectors held up? And what should investors watch out for this week? Let's break it all down. The PSEi fell 1% to close at 5,929.58. Investor sentiment remained weak, with losers outnumbering gainers 126 to 74 and foreign investors selling 1.6 billion pesos worth of shares. One of the biggest reasons for the sell-off was the continued depreciation of the peso. After breaching the 58.40 resistance, the peso weakened further, touching a high of 59.17 before closing the week at 58.86 per US dollar. The Bangko Sentral ng Pilipinas said it's letting market forces determine the exchange rate, intervening only to temper volatility. It explained that the peso's weakness reflects concerns about slower growth, especially amid the infrastructure spending controversy and expectations of further rate cuts later this year. Although the U.S. Federal Reserve delivered a widely expected 25 basis point rate cut, markets didn't rally. That's because Fed Chair Jerome Powell said a December cut isn't guaranteed, signaling that the Fed may pause after back-to-back easing. The cautious tone dampened global sentiment and reduced odds of another cut in 2025's final meeting from 90% to just 67%. So the U.S. is not coming out with data on labor, unemployment. No, it's on hold right now. But the latest September inflation showed that there was no pickup in inflation, or at least it was not as bad as people anticipated it to be. So in a way, people were already expecting the rate cut, and because of signs of economic weakness, the odds of a December cut was already at 90%. So in other words, it's already priced in. But, after the meeting, Fed Chair said that just because we cut this time, it's not yet a foregone conclusion that we will cut in December. And I guess investors got a little bit worried that, what if inflation picks up the next few months or the labor market strengthens, then maybe we won't see further cuts in interest rates. Locally, property stocks took the hardest hit. The PSE property index fell 2.3%, dragged by Ayala Land, SM Prime, and A-REIT, which came despite improving housing data. According to Colliers Philippines, residential take-up surged 108% quarter-on-quarter to 5,900 units in the third quarter, the highest since mid-2023. They expect vacancy rates in Metro Manila to steadily decline through 2027. Even so, investors sold down Ayala Land and A-REIT. In fact, shares of the two companies were liquidated even after Ayala Land announced plans to inject two commercial properties, namely Ayala Center Cebu and Ayala Malls Feliz, into a REIT worth 19.5 billion pesos. Although the transaction won't be completed until the second half of 2026, it's a positive move that boosts a REIT's retail exposure to 54% of its portfolio and should enhance its dividend yield. Well, in the past, I think the market would have reacted more positively. But I think right now, sentiment is being negatively affected by other things or other factors, which is why the price of Ayala Land and A-REIT didn't go up. I think right now the attention is on the ongoing corruption scandal. So sentiment is quite weak. And then I think also for A-REIT, if you look at how prices of A-REIT have performed for the year-to-date period, it's quite strong. Maybe investors are more focused on taking profits because they're still worried about how things would pan out as far as the corruption investigation is concerned and the negative impact of what's going on economic growth, at least in the short term. In contrast, power companies outperformed on better-than-expected earnings results. Aboitiz Power rose 1.6% after reporting 10.3 billion pesos in core earnings, up 1.5% year-on-year, signaling a recovery from a soft first half. Meralco gained 1% after its 3Q core profits jumped 21.9% to 14.5 billion pesos, beating forecasts. The strong showing came from MGen, its generation arm, which more than offset weaker results in its distribution business. For the first 9 months of this year, MGen reported a 63% increase in earnings contribution to 14.7 billion pesos, largely driven by the first-time contribution of 2 new plants and better availability of some of its other plants. On the other hand, Meralco's distribution business performed poorly due to customer refunds and the 2.1% drop in 3Q sales volume, which dragged revenues lower. Bloomberry announced that it found a buyer for its Jeju-san casino in Korea. Gangwon Blue Mountain already made an initial 500 million won down payment for the purchase. The sale is positive since Jeju-san has been losing money for years, reporting a 146 million peso net loss in the first half of 2025 alone. Although the deal is still pending regulatory approvals, it should help boost Bloomberry's profits in 2026. Technically, the PSEi's outlook remains weak. According to COL's chief technical analyst Juanis Barredo, the widespread sell-off across both index and non-index stocks, including resilient stocks, could lead to a capitulation phase, with the next support levels seen at 5,905 and 5,804. Okay, so according to Investopedia, capitulation in the markets is panic selling in response to a market downturn, which accelerates the decline in prices. So as I've discussed earlier, Juanis thinks that a capitulation could materialize because you notice the breadth of the sell-off, like almost all stocks are being sold down. And we talked about how the property companies are strong, but they're still sold off. Anyway, I think if you read the Investopedia article on capitulation, what's really interesting about it is that it talks about how prices respond, and there usually is a rebound that takes place after shares are sold down sharply. In a way, the prepared investor should be closely watching because when a capitulation happens, there is a irrational selling that goes on that makes a stock really cheap. So investors who have cash and are patient can take advantage of that irrational selling to buy the stock, and then it rebounds again. And then when it rebounds, that is an opportunity to actually make money. This week will be data heavy, with the PSEi releasing October inflation on Wednesday and 3Q GDP figures on Friday. Economists expect inflation to tick up to 1.8% from 1.7% in September, while GDP growth could slow to 5.2% from 5.5% in the prior quarter. At the same time, more 3Q corporate earnings will be released, and strong results could be the key to reviving investor confidence and spark bargain hunting. Well, of course, I'm always optimistic. I think there's a light at the end of the tunnel. I think the major issue is there are two things. First is that if you look at other strong markets like the US and China, one of the sectors that is very strong, actually they're also encountering like a K-shaped type of market where the strong performers are your tech issues. Because right now there is AI craze. Anything related to AI goes up. Same thing happening in other countries like China. You also have the tech stocks performing well. Unfortunately, we don't have that. Secondly, although earnings in the Philippines are growing, they're not growing fast enough to be exciting. Okay, usually the earnings growth here in the Philippines is single digit. So in a way, I guess the investors aren't excited about it. That's why, they're not buying stocks. I think those are the two main factors going on. Is there light at the end of the tunnel? Well, yeah, definitely. I think so. If, economic growth is better, then maybe the earnings growth on these more traditional businesses should accelerate and not stay at single digit. I mean, think about it. Like the past few years, we had banks delivering double-digit earnings growth, and the prices of banks went up quite a bit sharply. And you also have other names that performed well as their earnings turned around. Most of them are like smaller cap stocks, like before DigiPlus. Remember, it was one of the strong performing issues. Then we had Macro Asia, STI, among others, also performing well. So once these earnings rebound, I think we can expect prices to go up. While the near-term picture remains challenging, valuations are now very attractive. The PSEi is trading at just 8.9 times PE, its lowest level in 10 years, even lower than its March 2020 pandemic low. This market may not be ideal for short-term traders, but it's very attractive for long-term investors. Many fundamentally solid companies are now trading cheap and offering high dividend yields, providing steady income while waiting for sentiment to turn. Here's a list of some high-dividend stocks trading in the PSE. That's it for this week. While the market remains volatile, it's also offering opportunities for patient investors who can look beyond the short-term noise. Remember, in tough markets, stay focused on fundamentals, not fear. If you found this helpful, don't forget to like and subscribe so you're first to know what's moving the market. Once again, I'm April Tan, and this has been Intelligent Investing. Remember to stay sharp, stay selective, and as always, invest intelligently.